Adrian. And Alex, I think you've been examining those relationships for quite some time. So how do you deal with these changes of tide?
Yeah, I'm going to say just 3 things regarding correlation, and I think they're very important and fundamental in nature. The first one is correlation does not mean causation. Just because 2 items are moving together, that does not mean that there is a relationship between them. I've seen charts when they correlate the S&P 500 and they show me another mystery chart. And the numbers between, the visual relationship between these 2 charts was so intriguing, but at a later stage, it was revealed to me that the second chart was the number of kidnappings in Bolivia. So make sure that what you're seeing there is there is a reason for it. Always ask why. The second point I want to make regarding correlations is, I'll be using a quote from an ancient Greek philosopher. There is nothing more constant than change. Correlations change. They come and they go. Nothing is for granted, even in the realms of fundamental relationships. I'll give you a classic example, textbook economic example, the relationship between yields and equities. Lower yields, higher bonds, lower borrowing cost of capital, and lower yields, higher bonds equals better equity prices. For the larger part of the past 100 years, if you study financial history, that relationship has held. Sometimes more, sometimes less, with 3 exceptions. 1, United States 1930s, depression, deflationary pressures. 1990s, Japan. And then post-1998, again in the States. When you had that relationship turned on its head, all trading systems that used closed-loop logic, we will buy market A because market B automatically does that without some kind of a price filter, they were literally bleeding through the ears. Markets and relationships change because the underlying fundamentals change, if there is one. And the third point I want to make is that during times of crisis, correlations tend to unity. When the proverbial hits the fan and people want to be getting out of their positions, they will be selling out of anything. Then that is why you will be seeing coffee futures correlating with bonds. There is no fundamental relationship between them. It's just an act of liquidity, which circles back to seeing why.